Hello, my name is Nick Quinn.
And I'm Shane Vernier.
And I'm Connor Woods. We are the market analyst team at howtotrade.com, and together we're going to explain everything you need to know about trading the AB=CD harmonic pattern. So let's get started.
The ABCD price pattern is one of the harmonic series of chart patterns and also one of the building blocks on how traders think about how the market moves. The pattern is probably one of the most simple patterns to understand, and you can find it in any price chart. It connects well with Fibonacci ratios, and traders often use them as a way of looking for trend reversals and trading opportunities. So let's take a look at exactly what we need to see in a price chart. When we think about the ABCD structure, it really is one of the fundamental building blocks on how markets are constructed. Everybody sees the concept that markets move in one direction, they hold, they pull back, they contract, and then they make another surge and they move on to continue the trend. That is the basic structure of an ABCD structure. What makes this unique from a harmonic point of view is how it connects with Fibonacci ratios. There's a couple of key points, though, that we just need to know, and that is that the move from A to B should be roughly the same sort of distance as the move from C to D. However, both of those particular legs should always be much more pronounced and much larger in scale than the move from B to C. From there, what we want to see is the way that the point C and the point D interact with the Fibonacci retracements and extension levels. Point C should always be either the 61.8 or the 78.6 retracement level of the move from A to B. When it comes to point D, that should always be an extension, a Fibonacci extension level of either 127.2 or 161.8, and that should be the extension level of the move from B to C. So once you have that structure in place, then you have you validated the setup, and that is how we'd go about identifying it properly in a price chart.
So let's have a look at an example on how we can trade this AB=CD candlestick pattern. Now, once we've identified the pattern, we do need to draw on the trading chart and find those appropriate levels to set those entry points. So if I get my markings on the chart now, we can see this pattern coming into play, and we can see we've got the correct Fibonacci retracements within that as well. So we've got our X to A to B, our B to C, and our C to D. Now, that C to D and that D point is our entry level, and we want that 127% preferable entry level on that point D. So that's around here. So you can see that once we're at this point D and we went long on this market, potentially some people have a stop loss just sitting below point D, maybe want it below the swing lows here, either way. And you can see that the take profit, even if we was targeting point A, for example, 2.56 risk reward, fantastic entry, hardly any drawdown at all. And we actually went on to make a 3.86 risk reward trade. And that's exactly how we can use that AB=CD pattern in our trading.
All right, let's look at a few of the key pros and cons for the ABCD pattern. On the pro side of the ledger, the pattern is highly accurate and it's used to predict future performance. It operates with a high winning percentage. Secondly, once a market reversal is confirmed, the ABCD pattern is an advantageous formation when compared to other chart patterns. And lastly, usually the ABCD pattern indicates a strong reversal and provides a trading opportunity to take long-term positions in a developing trend. Now, on the con side, the pattern is not for beginners. It's not easy to recognize in the live market on the fly. And lastly, the stop loss is not well defined with the ABCD pattern, so expect an enhanced risk profile when using this chart pattern to trade the live markets. Now, let's review some of the key takeaways from the ABCD harmonic pattern. Number one, ABCD is a trend reversal pattern that helps traders identify when the price is about to reverse and change direction. Number two, the pattern is characterized by 4 points and 3 price swings based on Fibonacci numbers. Number three, to use this pattern, you can draw the ABCD formation by using built-in indicators on your trading platforms. Number four, after identifying the ABCD pattern, a trader will enter a position at the D point. And number five, your stop loss is placed below point D and your take profit is set at C point or the A point. If you want to learn more about the ABCD harmonic pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you how to fit the ABCD pattern into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to gain valuable market experience, and once you're ready, feel free to join our How to Trade Funded Trader program.